Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for August 24th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. More of the same. Really nothing much to say here that I haven't already said here for the last few weeks. It's just very, very quiet, boring, sideways trading activity. I mean, yesterday's RTH range was so tiny. Um, for the most part, just really didn't trade much at all. 4-point range most of the day until the afternoon. So really, just very poor trading conditions right now. So you have to be very careful. For the most part, pullbacks have been buying opportunities as this thing continues to drift quietly higher. Obviously, 2200 is a big sticky level that a lot of traders want to see. But we also have some upside key levels that we can be watching for as well. For example, from this pivot low here. This is the low of the week, 2173 half. The primary bull target for the week then becomes 2214 if this thing continues to trend higher. We obviously see effects here of the market waiting for Janet Yellen, and she has a speech on Friday at 9 a.m., so we could be looking for that as well. So it could be rather quiet here, but for the most part, I think this thing is still squeezing higher. Pullbacks are still to be defended as this thing continues to push higher. All right, let's take a look at the intraday time frame. All right, here's the intraday. Looking at this one, what you'll notice here is mostly price trading at and just above VWAP here. VWAP flat, 2185. Here's the previous close, just chopping around that, trying to hold above it right now. And so you can just see it's basically just kind of holding these levels after yesterday's late day slide. But for the most part, it could be a fade new highs, fade new lows type of day as this thing continues to chop back and forth. If price comes down here, remember this could be a great opportunity to fade back up, as all pullbacks are better swing buying opportunities. If you're going to sell today, then you have to be able to do so in a way that allows you to scale and limit your risk immediately. Okay, let's take a look now at crude oil. Now, while the ES hasn't been doing a whole lot of movement, crude oil has been hot and heavy. This one has moved really nicely here lately. We've seen, our failure to hold below that 42.40, which was a key important level there. Once that occurred, we pretty much knew it was a program-driven trend day. That led to an outside buy reversal signal, and ever since it's been a straight squeeze until these recent lows. And again, what we mentioned Friday on this day was that if this day holds like it is, it could be a digestion day, and the next day could be a major day that runs the stops. And if that occurs, I mentioned, then any pullback to this zone is likely to be defended by bears looking to defend and push this thing lower. So while the bulls came in and defended these lows, once price got to the midpoint and into that zone from the previous low, that's right where the bears came in to defend. So right now, bears are still making it look like they have a chance here with defending and closing it back toward the center of the day. This is still an important key level here. That's 48.30 to 48.50, basically that zone. And if bears can continue to keep it offered, there could be a little bit more downside ahead. Bulls need to reclaim that zone in order to really start getting this thing squeezed into the next upside targets. So that's the key level to watch. Right now, 48s have also been very important. If we take a look at the intraday time frame, we had a significant squeeze the previous session. That's exactly what we were looking for in pre-market trading. We were talking about that 47.30 to 47.20 zone. I mentioned if we can push through that zone, we could see a rally all the way back up. And it happened later on in the morning, but once it happened, it was a huge squeeze. The squeeze actually started a little bit lower off of VWAP, and boom, big time move up, hit our 100% target from our key range, which set the edges for the day. So it basically traded perfectly off of the zone and some of these key levels. But late in the day, we finally gave it up and came back after trading back and forth. And our key level to hold, leaving the trading room, was basically the 47.25, 47.30 level. And this is where we've dropped into right now, and that's the battle zone right here. So if we zoom in on this a little bit here, you can see right here, this is the 47.25 level, 47.30, and that's the zone here where boom, we came down, we're trying to hold it, just went offered, now it's coming back, and you can see prices attempting to be offered at that zone again as bears come in to defend it. So that's the key level to watch. The over-under is going to be this 47.25 here this morning. If bears get trapped too low below this level, and all of a sudden you start to see this squeeze, it could be a quick move back to 47.83, followed by a push back above 5-day value of 48.17. All right, let's take a look at gold now. Here's gold. This is an a daily time frame here with nice composite VPOC here at 1243. This is an HVN up here, so micro composite VPOC. You have the LVN right here that separates both of those distributions. That's the most important level on this entire chart. So that's about 1306 to 1310. And then we have this level right here, which is 1362.5. That's where bears have been positioned ever since they absorbed all the demand in this zone and took those stops offered. So once they did that, bulls have come in to redefend off of the FOMC level. That's 1334.30. Obviously, we have Janet Yellen's speech coming up on Friday, and here you have gold just sitting right near its Fed level from a month ago. So this is very important right here. This is obviously around where the market wants to trade as we head into Yellen. You can see this thing continues to coil up. So this thing is getting very, very ready for some sort of expansion. And once we do see expansion, it could be rather significant. We could be able to mark off distances based off of this level, or we could just be watching the key level from the Brexit key range. So there's a lot of different targets we can watch, but if we do see a retest of 1306 to 1310, I still believe at first it's still a buy opportunity until proven otherwise. But once it fails to hold above that general area, the next major level down is going to be composite VPOC 1243.40, in addition to recent support at 1208.30. So there's some major implications to come once we do get that shakeout. But once it comes, we'll have some big time levels and some big time potential points to come in gold. All right, looking at the NQ now. Here's the NQ. For the most part, this one continues to drift higher, continues to remain near its highs. We talked about the fact that we could see an upside squeeze above 48.20. And I mentioned, should it come, it could be rather significant. And it was a big time squeeze, big time move. But right here, once we got above those prior highs, that's where the rejection occurred. And then price ends up closing back at or just below 48.20, just below it. So that's a failure. That's a failure to take those stops and run with it. And so now, the market had to come back, re-gear up. And look, right now, this low, below the previous session's low, already rejected. And we're already attempting to hold above the previous session's close price, which is very important. So right now, this is significant just in that you can see how the bulls continue to try to get this thing to squeeze higher. Any failure to hold above 48.20 throughout the day could be significant, and that could lead to a move back across the range to take out these lows into that 47.65 key level. So right now, I still believe all pullbacks are being bought. And right now, this pullback below the previous session's low currently is being bought. If it fails to hold above 4,800, then we could be looking at another opportunity to buy it on a swing basis much lower. So we'll see. And if we take a look at the intraday time frame, here it is. This is the previous week's close, and this is the previous session's close. And right now, these prices were defended at the weekly pivot range. We saw a bounce back up, and now prices are holding above the previous session's close. So these are some important key levels right now. Very, very important. 48.20. 48.20 is the level that bisects those two ranges. And remember, we had a very clear trading range here. I mentioned if we get above 48.20, we could see a nice squeeze. We saw about a 17 handle squeeze from there. So it wasn't super significant. and we knew that this thing was just starting to drift. But now it's given up a lot, but it's come back and redefended off of the pivot range and already back above 48.20. So 48.20 ultimately is the key level here. But right now we have this range that's formed, so it's trying to hold at least above 4,800. So right now it's just a sloppy uptrending market. You have to be quite careful, but keep an eye on the previous week's close here. All attempts at that level have been defended so far. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.